Gold and silver had a ratio of pretty close to their natural ratio for thousands of years. And why? And the answer is because they both served exactly the same function, money.
Now, if we talk about gold, start with talking about gold just for a second. Gold has hit all-time highs in the last 12 months. Generally, historically, silver has followed gold, but there's been a bit of a decoupling over the last while, and silver is still languishing. It is well below 50% of its all-time high. What do you think underpins that? And has it got anything to do with the view that gold is a better monetary metal than silver is? Or what's the truth as you see it?
Yeah, that's a very tough one. So, I'll put on the this is my opinion hat, because if I had a clear answer, I would certainly give it. I love to work on fact, but this is an unknown. Well, here's my take. If you look back at silver's history and gold's history, and you go back thousands of years, the highest gold silver ratio ever got was 20-1. And most of the time it was below that. It was 16-1 by mandate when it was deemed by Sir Isaac Newton in England way back when. It was near the natural ratio back in Mesopotamia, Egyptian times. And the point is that, and I thought about this, it's the obvious, but it took me a while to think about it. Gold and silver had a ratio of pretty close to their natural ratio for thousands of years. And why? And the answer is because they both served exactly the same function, money. So when silver was only money and gold was only money, the two monies had a relationship that was pretty close to their natural state out of the ground, the gold-silver ratio from the earth. Now, when silver was predominantly the money in the United States, because we were basically put on a silver standard, not a gold standard. And then, of course, the bankers did their magic, which is outlined in the Wizard of Oz. It talks about the golden road to the Emerald City, which is the Bankers Hall of Fame. And Dorothy had the silver slippers to click the silver slippers and come back home and go back to silver. But I won't go too far down that road. The point
They were
being
they were they were silver in the original book, weren't they?
in
I
the
mean, when
book
they became the ruby slippers in the movie, but they were originally the silver slippers.
Correct. That's right. So the idea that silver isn't money started way back in 1873 with the crime of 1873. And silver was demonetized. So now you've had that bifurcation. And that bifurcation is silver isn't treated as money by the establishment. Remember, as much as you hear gold is, doesn't pay interest, gold is a static investment, you dig it out of the ground, bury it from being buried, and you bury it in a safe, and all the negativity you hear around the gold market, central banks are still buying it up, left, right, and center. China has moved significantly in the gold market over the last 2 decades. Russia has a good gold supply. So gold is mainstream, even though you won't hear that from many people but myself and others like you. And yet it's not acknowledged as mainstream. But the bankers look at gold. So they went to a gold-only standard way back in, let's say, the 1900s and slowly phased silver out of the monetary system. So if you go back to the early 70s, when we had the first bull market that I participated in, so I'm not saying the first bull market, I'm saying the first one I participated in, we're off the silver. We were on a silver standard, but silver still circulated through 64. 65, they stopped minting silver-based coinage. But in the early 70s, everyone knew that, not everyone, but most people knew that silver was money. I mean, it was our quarters, it was our dimes, it was our half dollars. It's money. So when the first bull market started, and you couldn't own gold until I think it was 72 or so, silver was the place to go. And so all the vending machines back in those days, we actually pulled handles, most of them mechanical, and all these physical metal discs were going in there of 90% silver. So the vending industry just gobbled up all that silver because it was far more valuable than the face value. So it left the market. It was, the law of Gersham's law about, good money is hoarded and bad money spent. So, and I'm giving a long answer, but the decoupling is what's been doing it. Because if silver were treated as money, and I did a lecture on this a few years ago, there would be a different ratio. It would be more toward maybe the classic monetary ratio that was edict. It's not the natural ratio, which is 15, 16 to 1. The natural ratio used to be 12 to 1, but we've mined so much silver out of the ground, it's now 7 to 1. And yet we're at a gold silver ratio of like 85 to 1 right now.
Mm.
It doesn't make much sense if they're both treated as money. So it's been disenfranchised as money officially, and that has seeped into the consciousness of most investors over the last couple of decades. Most people that don't know anything about the history of money think of silver as it's an industrial metal. It's needed for solar panels. It's needed for the electrical grid. It's needed for my flat screen TV, and that's all I think about. So unless we are able to get silver back as a monetary asset, and I think we could, I think that this bifurcation, I don't think it'll continue on, but it's probably peaked. And so even though the word silver and the word money is the identical word in the Romance languages, so if I go down to Mexico and I say plata es no plata, I mean silver is not silver, or money is not money, I wouldn't know what the hell I'm talking about.
Mm.
So there is this adherence to silver as money in some, Latin American countries, France, Argentina, and others. And also India is very aware of silver's properties as money. So it's not just it's not the people per se, it's the bankers. And I think that's deliberate way back from what we talked about, the Wizard of Oz. So now we've had this manifest. The problem that the bankers have with silver not being money and pounding that drum is that the industrial side is so strong that side alone could take over the gold silver ratio and start moving in silver's favor. I say that because the projections for solar usage going forward for the next few years won't eat up all the silver, just that, but the industrial side will eat up more and more. You go back 2 decades, the industrial use of silver was 35% of the market. Now it's 55% of the market, moving toward perhaps 65% of the market. You go back 20 years when we mined 550 million ounces of silver. Now we mine 850 million ounces of silver.
Mm.
So think about what I just said. We used about 35% of the market when we only mined 550 million ounces. Now we pushing towards 65%. And we were using, only mining 550 million ounces today as a thought experiment. That 65% would be almost the whole silver market. So how do you make silver jewelry? How do you have silverware, and what's left for investment? My point being is that we could have a natural squeeze coming into the market, because as the supply chain gets tighter and tighter, all these producers that use silver industrially will see the squeeze. And so they'll start to move into buying silver ahead of time so they can't go out of business. So once you have the Tesla, the 3M, the Mitsubishis, all these great silver users look and see, oh my goodness, our silver inventory is down to normal where we resupply. But my logistics guy just told me, hey, it's a month and a half out before we can get our supply. They won't go into a panic, but they'll go into a semi-panic. So once they start to build inventory back, and the missing key, of course, is more importantly, what I said earlier about silver not being an investment metal for money. What's lacking in this so far in the last couple of years has been institutional participation, which is pretty mind-boggling. Because if you go back to 2020, there was a guy named Scott Maynard who was at Davos, now known as the World Economic Forum, or better known as that. And Bloomberg interviewed him and asked him what was his go-to investment in 2020. He said silver. And if you look what happened in 2020 with the silver market on the institutional side, 320 million ounces of silver were bought through the ETFs.
Wow.
And you haven't seen anything close to that over the last couple of years, and yet gold continues to be just pounded. Gold has, been bought and bought and bought.
Mm-hmm.
Silver hasn't gone along for the ride. So I would say, I'm not blaming anyone. You asked my opinion. It's really the institutional side of the banking sector. I think the bank, this is conspiracy. I'll just say it because, oh, David, my thoughts are, why aren't the banks or the institutions moving into the silver market? The algorithms work just as good for silver as they do for gold. And they know they could get a pretty good pop. A $3 move on a $20 investment is a pretty good percentage.
Mm-hmm.
And they want to take advantage of those. And we've had several of those in the last couple of years, both up and down. And so why aren't the institutions? And I think, now this is again kind of on the periphery, that maybe the word's out, hey, let's just continue to pound gold, and let's just leave silver by itself. Because you see drainage out of the physical supply you don't normally see when you've got gold making highs. You see the ETFs being depleted. You see the LBMA, offing physical silver, and you see the COMEX going from what was 150 million ounces down to as low as like 35 million, and now I think it's at 42 in the registered category. So where's all that silver going? Well, it's not all going into solar panels, but a lot of it is. And so it just makes no sense to me. And silver's objective from that aspect of, silver doesn't care if it's bought for investment or it's bought for a solar panel. Demand is demand. But there's huge demand on the industrial side and almost zero demand on the investment side outside of retail. Retail still has a demand, and even retail's been fed up. And that's the last part I want to add to, is that most of your silver investors are pretty loyal, pretty well educated, understand what's wrong with the system, look at silver as a hedge, and yet they got to pay these huge premiums, not only because silver ebbs and flows in such a small market, but you got these value-added taxes. And so to pay a premium on silver, you got to be a devotee to the silver story.
Mm-hmm.
So you're buying something that on the spot market, say it's 20. I know it's like 23 today, US, but let's just use 20. I can do it in my head real quick. And now you're paying a $5 premium. You might pay a $2 or $3 premium and a $2 VAT, and you got a $5 premium on top of a $20 investment. I mean, who in the right mind would pay that kind of a premium for a stock? You wouldn't, but silver believers will. But then they've got to overcome all of that, vigorish, all that added on to break even. And then the market goes sideways for 2 or 3 years. They want to give up. It's like, I wish I never heard the word silver. Gold's taken off. I should have bought gold instead, or on and on it goes. So there's a psychology of it as well. And lastly, there's this Bitcoin cryptocurrency that keeps going up and up and up. And if you look at my crypto conspiracy series, John Perez talks about it being a psychological operation, that we've got the libertarian attitude of anti-government money, that we own free and clear of any outside interference, like a gold coin or a silver coin. It's electronic. It's really sexy. And that would move money from what normally would have gone into the silver market into another asset class. So if you combine all those things, I think you could say, silver's had a rough ride here for a variety of reasons. You can agree with my opinion or not, but I've thought it through, obviously. And it doesn't mean it's gone away. Once gold breaks free into a new all-time high and stays there, institutions pile on, retail piles on, people will start looking at silver, because once gold gets to a certain level, and it's different for everyone, but we'll just use a round number, say 25, 2,600 US, and silver is still sitting there at, 25, people can say, you know what, silver looks like a lot better deal. And once silver gets to 30, 31.2 in US terms, that premium I talked about goes away. And everybody's sitting at a profit. Might be a meek one. It might be $2 profit. It might be a $1 profit. It might be a break even. But people will hold. It'll be like the cryptos. Hold on for dear life, because now I've broken even and this thing's going higher. So any new buying will start to take it higher. Well, the algorithms will kick in, and they'll start to say buy, buy, buy on the investment side, even on the institutions. Now, whether they execute or not remains to be determined. but the industrial side will be looking in their stockpiles, say, do we have enough to maintain our business? So you could get this synergy where you get a big investment demand and an industrial demand and new highs, coupled with gold moving up and silver being a better buy, all at the same time. So I wouldn't give up on the silver market just yet.
There's so you split it there between the investment and the industrial, and obviously you're saying that the percentage of industrial metal that is being bought each year is on the rise, particularly because of the electronification, if you want to call it.
Yeah, let me just interject. I'm sorry, but with the recession / depression I talked about in another interview, it could curtail it somewhat, but a trend in motion continues to actually stop. So the demand for photovoltaics continues strongly. It may not be quite as strong as projected, but it will be higher than it was last year. So the industrial side will maintain momentum going up, even in a recessionary environment. It may not be quite as strong as outlined. Could be stronger, though. But what I am saying is, yes, it will continue. Will a recession, curtail it somewhat? It could, but not as significantly. It's not going to make it go negative. It's not going to stop it. The train has got momentum. It's moving forward.
There's something else I want to touch on, and that's a geopolitical element to this, because we talked about this last time that you were on, and you described silver as the war metal. Now, we're in a situation from a geopolitical point of view where there's increased tension around the globe. There's a number of hotspots. While we're obviously not investing in the war case, talk to us again about why it is that you call silver the war metal.
Yeah, that's the hardest thing to get from. You won't get it. You won't get it from the Silver Institute. You won't get it from CPM. You go way back at my age, Haney and Hardman used to put out a briefing on what the silver demand was. They briefly talked about aerospace and military. But in that industrial 55 to 65%, there's a great deal of military use that's just not even written down anymore. So a lot of mil specs, called military specifications, require the best. And, the military spends a great deal, and they really don't give a fig about the price. They get it from the taxpayer or the printing press. So some of these batteries must be silver because they hold a better charge. So silver is used throughout the military industrial complex. It's used throughout the aircraft industry. It's used throughout aerospace. And yet you never see those statistics broken out in either of the big silver studies. And yet it remains. So the bigger the war continues, the more the war continues, and the bigger use of military equipment, the more demand there is in the silver market. So going back to the previous question, well, what if, the recession curtails photovoltaics? Okay, but what if the war doubles? I mean, you're going to have perhaps a doubling in the amount of silver that's required for everything across the board, from batteries to satellites. And the semiconductor industry uses 44 million ounces of silver a year. Just think about that. Think how many semiconductors we use now versus what we used, say, 20 years ago.
Yeah.
We got semiconductors in damn near everything. And so, again, you can't turn off that trend. So the trend of war will demand more silver, the trend of, photovoltaics, and the trend of the monetary degradation where people are losing purchasing power will continue. And that will continue to exacerbate the problem. It will cause people to think it through, and they'll ask the question, and if I can't afford gold, why not buy silver? Well, look, you got this huge premium. Well, so what? Silver starts to move, that premium problem kind of goes away, because, I've lived through it, and I watched, where silver went up a huge percentage in a month's time, where, you didn't think about the premium. All you really thought about was, can I get into the market? And if I have this asset, it's going to protect me from this runaway inflation I'm experiencing. So then, definitely doesn't. Yeah, go ahead.
Sorry, I was going to say that then a lens to look at this through is that ultimately what's going to drive the price of silver higher is going to be led by the industrial side of the equation. There are many industrial uses, loads of industrial uses for silver, but the thing is that there are new uses that are being added to that industrial usage side of the equation.
I would say it's slightly different. I think you're correct. I think the industrial side will build a foundation that will continue to push the silver price up slowly and surely and grind up. But the real factor that moves silver's price is investment demand. That's the one variable. So when investment demand is high, like it was in 2011, you hit your almost $50 again.
Sure.
And we haven't had investment demand from the institutional side at all, hardly. And but yet we did have it earlier. Yeah. Will it come back? I think it will, because when cryptos peak out, I mean, there's a lot of things. When the stock market and the bond market start having problems, the run to gold will accelerate, and that will bring silver along with it, like the thesis of our discussion. We talked about, is gold leading, and will it, and why isn't silver there, and why is it perceived as just an industrial metal, everything we've talked about. But the end is nigh. I think we've only got, I think we've got this year and next before we really see further degradation in the geopolitical system across the world, where the monetary picture gets blurred and then becomes clear that I don't trust my government's money anymore. What am I going to do about it?
Do you think then that it's accurate to say that the investment case for silver can be built on the fundamental applications of silver? So, when we see the increase in the demand for silver for industrial and other applications, that makes for the investment case. So
absolutely. Thank you. I've been trying to get those words out of my head. So the millennials that don't think of it as money really don't care. If you look at rhodium, rhodium had one hell of a run. And silver could do the same thing, because it's not that, I don't care if it's money or not. Like I said earlier, silver doesn't ask, are you buying me for industry? Are you buying me for monetary purposes? It's a demand. It doesn't care. So if that demand comes in because it's scarce and it's moving, then the millennials, I don't care if it's money. It's an asset class I can buy. Sure. And it's moving in my favor, and therefore I'm going to buy it. So they have no thought whether about the history of money or anything I care about. They could care less. They don't even know about it. Yeah. But it's a market that's moving. And this momentum player is pervasive throughout the entire financial system. Most of these algorithms are based on momentum. And because of that, the whole system has been trained. I mean, you go to one of these trade shows that you and I have been at, some of the bigger ones where they're like the Money Show, where we were together in Las Vegas. If you look hard, you don't have to look that hard. You'll see about every 10th or 15th booth has a trading algorithm that you can put in your computer, and your computer will tell you when to buy and sell. And just multiply that times, how many investors are out there. So once we get, the old expression, a bit in the mouth, a horse that's a racehorse, and it really starts to run, that will bring a lot more people into the market. And we're kind of far away from it in silver, where, we need to get to 30-ish US terms for that to happen, but it can and it will. But gold's already got its bit in its mouth, and it's kind of just starting to, it's in the race, and it's just kind of biding its time. And once it breaks out, it'll run. And when it does, it will take silver with it. I'm convinced. I've never seen it the way. And if I'm wrong, I'll admit it, but we haven't done that bad in silver. I mean, but we certainly haven't done anything like I expected at this point in time. I admit that. But, we started promoting silver when it was at its inflation-adjusted all-time low. And who bought it? Warren Buffett, Bill Gates, and George Soros. They all bought it at the inflation-adjusted low. And that was under $5. And now we're not quite at 25. But in that 20-year time frame, it hasn't, a 500% return isn't like nothing. But yet it certainly is not, again, what you would expect. But the market is, managed and primarily psychologically. Again, why would I buy silver? Why would they put a VAT so heavily on silver and not on gold? I mean, there's a whole thrust to the establishment to gold's okay. If you're going to buy precious metal, gold's good, silver's bad. We put a VAT on silver. It's hard to access. You look at some countries, I mean, even today at $22 so you'd pay $30 to get it. But gold, you can got maybe a 2 or 3 or 4% premium. Well, you'll buy gold. I mean, the whole push toward gold is there, and it's been there, as I suggest, from early on in the, or late in the 18th century, early 19th century. And it continues to this day. And yet no one really thinks about it in psychological terms, but that's the truth. That's a fact. There's a gold is an establishment metal, silver is not. Silver is the rebel, the maverick, the outside the box thinker, the student of monetary history, and the people. I mean, if the people had enough gumption and education to buy enough silver, we would reverse the rule that he who owns the gold makes the rules. It would be he who owns the silver makes the rules. And the reason I say that is because without silver, you don't have a modern technological society. So if we all hoarded our silver and said, no, you can't have it, the internet goes away, the electrical grid goes away. I'm being facetious to make the point of what the real true value is, because the value of anything is what does it actually support in life. And gold really doesn't support a lot in life, but silver supports everything in the modern technological age. So if you really want to get even with the banksters, you would actually take a little bit of silver off the table and stick your tongue out at them when they start to need it. Not for money, but just to run society.
I like that. Before we wrap up, will you tell us a little bit more about the Morgan Report?
Sure. Been at it for several years. Been writing the report for about 25. Still my passion. We look pretty much at the equity side, although we look at ETFs. We look at things outside of silver. That's why I changed the brand of the Morgan Report. And we're first in rare earth metals, we're first in battery metals. We've got a pretty good run in a couple of our stocks in the uranium sector. I've been telling my members, you might want to lighten up on uranium. We had a pretty good run here. We do write about the geopolitical side. I always start with a blank sheet of paper and ask this question, how can I serve my readers best? So you never know what you're going to get in the editorial, but we do follow certain companies. I've taught from the beginning that big money goes to big companies, medium money into medium companies, and speculative money you can afford to lose. If you do that, you've got a balanced portfolio and you stay out of trouble. There's a sector that works much, much better in this, in the mining world than others, and that's the royalty companies, which we focused on. That's why if you bought gold at the top of the market in 2011 September, it was roughly the same price it is now. If you bought gold then and you held it for those 13 years, you'd break even right now. But if you bought my top gold stock on the royalty side, you'd be up fourfold. So these stocks, if you pick right and know what the hell you're doing, do better than the metal. But if you do it on aggregate and you just go to the HUI or the XAU or the gold nugget index or any of those, gold will outperform on aggregate the miners. But there's certain aspect of the industry, which are basically financiers of mining projects, can do better. And so we've done, certainly we've done better than most in the industry. There's one other gentleman that I know of, and there may be others because I don't know all of the, everyone in the industry. But Adrian Day, he and I think a lot alike, and he actually picked stocks for Euro Pacific and his own management, and we think a lot alike because there's really we're looking at a class of assets that you've got to look at who makes the most profit. I mean, gold is gold anywhere in the universe, so you don't care so much about what's produced. It's ubiquitous. It's the same thing. It's fungible. You want to see who produces that product with the best profit. That's what you look for. And if you find the one that's making the most profit, that's the company to invest in. So anyway, I went on a little further than I expected. The last thing is I'm making that movie that we talked about at the very beginning. It's called Silver Sunrise. You can learn more at silversunrise.tv. I am looking for donations. I funded quite a bit of it myself, but I need a little help on it. And if you're a rebel, a maverick, you're for the cause, any little bit helps. The landing page is silversunrise.tv. Hit the donations button and you can contribute or not. There's an email there if you have suggestions about, who you'd like to see interviewed or all that type of thing. It doesn't mean necessarily I'll do it, but certainly I'm open for input. And it's a movie instead of a book, because this documentary not only goes through the money problem, but it goes through a lot of solution. And if you look on Google, what's the number one stressor for people in their lives today? Money's about 80%. So whether you're rich or poor, everyone's concerned about their money, if they're making enough, if they're going to be able to overcome the inflation, if they can buy enough groceries, and on it goes. And this, of course, is a problem that's been my life's work, is to right the ship, to put us all on a field of monetary stability and monetary equity, fairness, where there isn't an elite class that gets to produce something for nothing that forces us all to use it. And if you think the fiat system is bad, just wait until they get to a CBDC. Not only do they control what you think, do, and say, but they can control basically or program the money for your travel, for example, or what kind of a house you can buy and everything else. So we must fight back. And the best way I can think of is education, which means the movie, and participation in like-minded people that are willing to risk some of their capital into an age-old money, silver and or gold.
And finally, where do we find the Morgan Report online? What's the website?
It's themorganreport.com.
Fantastic. David Morgan, as ever, it's been an absolute pleasure. Thank you very much for joining us on the channel again.
Thank you.